Hello folks, this is Jeff Gorton from Gorton Financial Group with our March 2014 Economic Update. In this video, we'll be talking about some of the major events that moved markets in the first quarter of 2014. We'll also be discussing what might affect markets in the days and weeks ahead. Please stay tuned at the end for a required disclosure statement. Well, the markets were volatile throughout the first 3 months of 2014. When a chilly winter and lackluster economic data caused stocks to lose some steam after their stellar performance in 2013. The major indices ended the first quarter mostly flat, with the Dow losing 0.72%, the S&P gained 1.3%, and the Nasdaq was up 0.45%. Though stocks may have lost some momentum last quarter overall, there were a number of individual turnaround stories that showed company fundamentals may be improving on a case-by-case basis. After growing 2.6% in the fourth quarter of 2013, the economy likely slowed in the first quarter of 2014, though we don't have official numbers yet. Predictions on GDP growth ranged from 1.2% to 1.5% growth. Unusually cold weather across much of the U.S. caused slowdowns in the labor market, manufacturing sector, housing, and other important segments of the economy. Now that spring is here, we can hope that warmer weather will trigger some improvements to economic fundamentals. Despite the slower pace of growth, many analysts still think we're on track to achieve GDP growth in the 2.8 to 3% range in 2014. The February jobs report showed that job growth accelerated more than expected, while the unemployment rate ticked upward slightly. The jump was due to an increase in the number of Americans looking for jobs. This is an optimistic sign for the labor market. All told, if we add up the official and estimated numbers, it looks like the economy added roughly 500,000 non-new farm jobs in the first 3 months of the year. The Federal Reserve held an FOMC meeting and voted to continue dialing back its monthly bond purchases while keeping interest rates low. At this rate, the Fed's quantitative easing programs will end in the fall of 2014. Fed Chairman Janet Yellen clarified the Fed's position by stating that though she believes the economy is strengthening, additional quantitative easing is still necessary to protect growth. Global worries dominated headlines for much of February and March and caused some stock market jitters as investors processed how a new Ukrainian crisis might affect global trading. Emerging markets saw significant outflows as investors feared Federal Reserve tapering might expose weaknesses in developing economies and shifted assets to the developed world. Looking ahead, markets will likely experience more volatility as investors digest the March jobs report and look for improvement in economic data. Earnings seasons may also contribute to volatility. Q1 earnings reports will likely prove lackluster. Currently, expectations are for earnings growth to be flat or even negative due to slow demand in the first quarter. On the other hand, optimism is high for a strong second quarter, and good news may send stocks higher. Once again, this is Jeff Gorton with Gorton Financial Group, signing off for the month of March 2014. I hope you found this commentary interesting and informative. We'd love to hear what you have to say in the comments section below. And if you do have any questions about what you heard in this update, or if you'd just like to discuss your personal financial situation, please give us a call at 405-681-9633. We'd be happy to talk with you.